Hello there, guys, and it's on Monday, and I want us to reflect as of what happened today, what was I expecting, or what do we expect also for these coming rest of the days for this week. So, if you haven't really watched what I was expecting as of this week, you can go back and rewatch the video that I sent earlier on. So I'm bullish for gold. I want to see higher prices for gold, and usually if I have an argument or a direction, maybe I want to see price deliver to that high. What do I want to see? I want to see maybe price creating the low of the week, then later on we can gravitate higher. And this is what I always anticipate, that I want to have a context area of which the market can deliver to as it is creating the low of the week. A good example was this week the market opened at this level, then we tanked lower, creating the low of the week. After it had created an immediate rebalance, then we pushed higher. Also, for this week, we had a specific level which I am watching still, which is this weekly fair value area, also in close proximity to this weekly immediate rebalance. I didn't want to draw many charts, but because they are in close proximity, that's why I had to slash them. So I want to see the market drop lower, create the low of the week, then maybe later on we can watch what will be happening around this area. If we have reactions, displacements going higher, then we can get involved. If not, then we can also try to find for another context area or another direction, which possibly will be this previous week's low. But since I'm bullish, this will be an area which I will be watching for what price is doing at this level. Then I can decide to engage if going higher or lower. So since I know that, and I had identified my two scenarios, which was scenario number one, maybe create the daily fair value area as thing into it, then we had a push higher. Then scenario number two was a drop into this area of the weekly fair value area. That's when I'm expecting a push higher, and knowing that we might have that drop, then I can know how I can engage with price. So what did I have? Knowing that I have two specific levels of which I'm watching for higher prices. So I dropped to the 4-hour time frame, and of the 4-hour time frame, we had this daily fair value area, which was my scenario number one. You can see currently I have scenario number two, that is maybe a thing into this weekly fair value area as well as the weekly immediate rebalance, then have a push higher. So knowing that, I was watching what price will be doing around this area. So before the New York time, which was this candle, this is the candle that I usually want to catch, the 9 a.m. New York candle, the 4-hour 9 a.m. New York candlestick. So prior to that, what had already happened is we saw the market dropped, react also to the daily fair value gap, but what we didn't really see is any signs of price pushing higher, right? But what we saw is price digging deeper into this fair value area, so the daily fair value area that is clear from the 4-hour fair value area. So we had us thing into that. Then later on Monday, we saw this was on Sunday. I guess this candle was on Sunday, but as of Monday, the market opened higher, tapped, formed a bullish engulfing candle, but I wasn't really watching. I was watching how this candle was to be closing. So what this candle did, we had a sting back into this. We have a volume imbalance over here. The market rallied back into it, fully filled that, then the market displaced lower. So with that displacement lower, having known that we have disrespected a fair value area, and what I usually love to see when a fair value area has been disrespected, I usually want to see the fair value area low sell side liquidity being taken if the market seems to be bearish. That's why this was my first target. Then if we could have us thing into this level, well and good. So knowing that we have these liquidities resting below, and somehow we are seeing violation of this fair value area. Usually what I want to see of a fair value area is something like this. If we use this path, is just a sting into that, a shallow one, maybe utilize this fair value gap, then push higher. So that's what I usually want to see. If I don't see that and I see deep a deep retracement into these into a deeper fair value area, then I know most likely we might be going for the opposing liquidities. So after identifying this candle had a closed bearish, I went to the 1 hour time frame, try to observe what structure or what is really happening from the 1 hour time frame. So what I saw is we had this drop into the fair value area, then we displaced higher, and during that time, the thing I didn't really like about today is we saw that the New York session came in close proximity to the Asia session, which to me was thinking, is it likely that later on we can see the market sweep these relative equal highs, then a drop off? Is it likely? But it seems I found a solution. I answered myself knowing that we are bullish. So the market will tend to engineer liquidities if the market is moving towards this side. Remember, we are long-term wise bullish. So some people will see a scenario like this and generally think that gold should be shorting, maybe targeting these lows and also these lows. Yeah, it's likely. But to me, how I did look at it is I'm expecting either reversal of this red line, as you can see over here, which is the weekly fair value area. And so since I'm bullish, I know the market will tend to create relative equal highs that will be the market will later on use or the market will target later on. So upon reading the market like that, I also knew that we were to be forming fair value gaps that were not yet to be traded into. And since we are long-term bullish, I think when the market will be reversing from a bearish to a bullish market, that's when all these fair value gap and also all these liquidities are to be swept. So if there are gaps that were to be traded, example is this 1 hour fair value gap labeled there. We had also this other one fair value gap. I was watching them. Why is it likely that we might not trade into them? Because the market is long-term bullish but short-term bullish, so we might create these inefficiencies. Then later on, as the market will be reversing, we might be, or the market will be rebalancing them. So with that, I had confidence in myself and said, if I find any trade, if my lower time frame setup prints itself, then I will take a trade. Then if anything happens, I will be really mindful on how to manage my trade, and I will take you to my MT5 and show you how I did manage my trade. So in this scenario, by the time the 9 a.m. Candle was happening, this is the 9 a.m. Candle, is we had formed that fair value gap over there, and then this candle 8 a.m. candle had closed below these 1 hour bullish fair value gap. And seeing that, now I wanted to drop onto the lower time frame and see what the market is likely to do. I wanted to see this candle displace maybe higher, create an immediate rebalance, then continue lower. That didn't happen. Also this one, I wanted to see the market rally higher, create that 1 hour immediate rebalance, then rally lower. That actually didn't happen. Why? Because the market was rushing lower. I think then later on, when the market will be now in its expansion phase for the week, we can be filling in those imbalances and also taking those liquidities. So I dropped onto the lower time frames, the 30 minutes fast, and at around 9, this was the 9 a.m. we had that fair value gap over there. So I was expecting to see this candle rally, sting into that fair value gap due to the rejection that we had observed before, but that didn't really happen. What we saw is this candle rallied, opened higher, rallied higher, created an immediate rebalance, 30 minutes, then we started displacing lower. And the 1 hour immediate rebalance, you can see 30 minutes did its immediate rebalance, then we continued lower. Also, what I observed is this breaker block. We had a low, a high, a lower low, then a higher high that respected these. So it's a bullish breaker block, these two consecutive up close candles, but at this time the market had disrespected that. And seeing that, now I was I can be taking in a short position. But the main challenge that I was observing, so if I have that 30 minutes breaker block, so from the high, so the two consecutive don't close candles, so that's my breaker block. So I dropped down to the 15 minutes time frame. What did I see is that the market had already closed below that breaker block, and also we had reacted off the midpoint of that breaker block. And so seeing that, and what I was mostly watching for is this candle to close below these 15 minutes bullish candle, right? Because it had reacted off that 30 minutes breaker block. I was anticipating to see this candle close below, and then immediately it closes below, I enter a trade. So as it was rallying few seconds before it closes, I did enter my position there, and then immediately kinda rejected, and we pushed higher. My initial stops were above this bullish candlestick, and 1 to 2, I think it was to give me 1 to 2. Yeah, I think my initial stops were around this area. Then what I saw is later on the candle pushed lower nicely, then later on rejected. As it was rejecting, and we have this 30 minutes fair value gap above here, to me I was we might maybe see price pushing into that 30 minutes fair value gap, also the 1 hour fair value gap. That's why I telegrammed I sent a message via my Telegram that we should be mindful of our risk, and also we can manage this trade. So as I was texting that, what I did, I went to my MT5. If I can take you really quick. So this is my MT5, and what we can see, I'd taken a position. Yeah, this is where I'd taken a position. And because I had my stops slightly above, I don't know what I can use to reflect. Yeah, I had my stops around this high. So as the market was displacing, and I thought maybe the market might rally to that 30 minutes fair value, then drop lower, I decided to close part of the trade in a loss. So I closed part of the trade in a loss, so that I should minimize my risk. Then after that, I didn't close the whole trade, and then finally the remaining part of the trade hit TP, and I guess everything was well. So risk was properly managed with this trade, because I cancelled my trade as the market was rallying higher, but also I was watching what was happening around this fair value gap. There is a small fair value gap there. I was watching what was to happen around that, and the market had us sting into it. Then we reversed towards that direction, and finally the TP was met. And as the market reacted off this 30 minutes fair value gap, then you can see that's where I did manage my trade, ensured my stops were above there. Then immediately this bearish candle confirmed bearish, I moved my stops to break even, and later on the TP was hit, and you can see currently we are having that pullback, but I'm expecting also a pullback, something like this, then a drop later on. So also a drop into this range, then we can have this expansion to these lows. Then as of tomorrow, we might push higher. So I think we are engineering the previous day's low, the Monday low, that if we are bullish on Tuesday, we might see a sweep, then we continue higher. So the challenge that I had encountered here is we had the 1 hour fair value gaps that were very were unmitigated, and how was I to approach the markets. And I think I approached them nicely, because the lower time frame entry criteria printed out nicely, and also my risk management was kind of on check, right? And was good. And that's what I think from this video we can learn, that whenever you are seeing things are not well, instead of closing all the position, because if I'd closed this position, then I think it will be regretful when later on I could have come and noticed that the market had hit the full TP other than the SL. So instead of closing, just minimize your risk. Maybe close position of a small position of the trade, and if the other position will hit stop loss, I think whatever you are risking will be then half, because if you close half of the position, then your risk, or the risk exposure will be kind of small. And also, when we have scenarios where we have fair value gaps, it's kind of low probability, but understanding that we are long-term bullish, and also these gaps will be later on be refilled or be rebalanced when the market is going higher, then you can decide to take a risk, because we know there's no reward minus a risk. You must take in the risk. So that was the trade today, and this was a good trade, a good position, well managed, and at the end of the day we got our sweat paid off. So that is it. Hopefully you did learn, and if you have any question, feel free to let me know, and I'm here to help out. Remember, join the Telegram channel for every details that I usually send, and ask me for the link or DM me, and then we can see what we can